Hello and welcome. You're tuned in to CNBC-TV18 Prime. Let's get cracking on a brand new edition of Big C. I'm Manisha Gupta and with me is Nigel D'Souza, back with your daily dose of commodities, cryptos and currencies.
Well, hi Manisha. Well, plenty to talk about on the show. First up, let's tell you who's going to be joining in. We have Lucy Gazmararia of Token Bay Capital who will be joining in. And Richard of Matrix Global as well will be joining in. So we'll be having a chat with both of them in just a bit. But before we get to that discussion, let's take a look at the global equities. Well, it's a losing day on Wall Street. The S&P 500 locked its fifth down day in the last six. The Dow notched up its sixth losing session out of the last seven. And the shares of Snap and AMD extended declines in after-hours trade. Stocks in Asia Pacific, though, they're largely trading in the green, barring the Nifty 50, which is bobbing around a little bit. We're down close to around 40 points, but we've recovered a goodish bit from the low point of the day. But shifting focus to oil prices then, they have rebounded from a 5-week low as concerns over supply disruptions continue to mount. The street continues to make sense of the US President Donald Trump's pressure on India regarding Russian oil imports.
And with that, let's get in our first guest of the episode. And we have Lucy Gazmararia, founder, managing partner, Token Bay Capital. Lucy, hi, thank you so much for joining in. We understand you are a venture capital fund which does invest in blockchain and cryptos in some sense. Would be interesting to understand on what really has been the experience for 2025 till time, with so many news, Bitcoin hitting almost all-time highs many times this year, and the way the US push has been towards friendly crypto policies. How has this year been for you?
You know, it's interesting. There was so much anticipation. First of all, thank you so much for having me on the crypto show. That's great to join you. There was so much anticipation with Trump coming into power because he kind of laid down the sort of framework for how he was going to treat crypto on his campaign trail in 2024 and, make the US the crypto capital of the planet. And so I think at the beginning of the year, it was sort of everyone holding their breath. Is he really going to come true with these policies? And the answer is he's delivered on crypto regulatory frameworks and making progress on, rebuilding traditional financial infrastructure, moving it over onto crypto and blockchain rails. And he's actually exceeded expectations at this point. It's unbelievable how much of a focus the US administration has on crypto and blockchain technology and using it to assert the dominance of the US dollar and to rewire traditional financial markets and move assets on chain. So I think the answer is 2025 has kind of surpassed expectations on the regulatory front in the US. In terms of prices, surprisingly, less explosive, given how positive the moves are coming from the US administration and from politicians. It's almost a little surprising that Bitcoin is not trading higher and Ethereum and the prices of some of these other major cryptos. So, time will tell if the catch up happens, which we're expecting in Q3. But, overall, immensely historic times for crypto markets in 2025.
Lucy, you founded Token Bay Capital in 2021. That perhaps was a peak of cryptos and blockchain and NFTs coming in. DeFi was at the top. And then the next 2-3 years were crypto winters. 2025, as you said, has surpassed a lot of expectations. But is that exactly how you see this year ending as well? What are you anticipating working with in sense of policies, country adoptions? We've seen ETFs done quite well. Institutional investment has been quite on the stronger side as well. Do you see that continuing for the rest of this year?
I think the future of crypto is now not in question. Since I've been in the crypto space, which is since 2018, sort of in the highs and lows and the market cycles that are, they're just associated with the crypto market, driven by the Bitcoin halving events every 4 years. And every time we've gone into a bear market in the past, it's like, is crypto going to survive? That was a question. That question has gone. The question is now, are we even going to have bear markets anymore? Have we moved past that stage? Has the market matured to such a degree that that's not even what we're expecting? That being said, the jury's out. We should be getting a bear market coming sometime towards the end of this year or in 2026. And the voices at the table are kind of split. Some people say we're not going to have a bear market, those days are gone. And others say, no, this is a cyclical market and it's going to come back. So, bear markets are actually a pretty positive time generally in terms of the building phase of crypto. When markets are incredibly frothy and, coins are going up 10, 20, 30% a day,
Mm.
it's hard for people that are building fundamental projects in the space to actually keep focus. It sort of all gets out of hand, and the euphoria really does get a bit out of hand. So actually, bear markets are a useful time to sort of reassess what needs to be built. Everyone focuses on actually building this new financial plumbing and new blockchain infrastructure as a public good for the world.
Hi,
Um,
Lucy. Yeah,
hi.
go ahead, please.
And to the earlier point, how are other countries responding? Well, they could all sort of stick their head in the sand for years when the US was so anti-crypto. They were cracking down. It was, absolutely, you couldn't even mention the word crypto. If you had to talk about crypto, of course, it was digital assets. And obviously, under Gary Gensler's regime, it was really extreme. And people were being thrown in jail. So it's not just it was not allowed. It's like, if you do this, if you innovate in crypto, you risk going to jail. And
Wow.
that the software engineers, people that were even writing code is viewed as a constitutional right, free speech. But suddenly you write code that then is used in an application that's used for illicit purposes or to transfer money to sanctioned countries, you could end up in jail. So it was a very dark days in the US when it came to crypto. As a result, other jurisdictions could just ignore it, right? Because it's such a big shift and it's so fundamental what's happening that it's almost too much to take in. And it's a little bit complicated to get your head around. So policymakers could just ignore it. No longer. The US has flipped 180. They're going all in. They want to be the global leader in crypto and blockchain. Now, every jurisdiction has to take action and really assess how they're going to join this revolution. It really is a revolution.
All right. Hi, Lucy. Good to have you on the show. Thanks a lot for joining in. Lucy, if there's one asset class where people are happy with President Trump, it has to be the cryptocurrency space, right? Because the other asset classes, they are still in a bit of a flux. My question to you is, we're just at the start, and a couple of assets like the global equity markets are wondering, what is Mr. Trump going to do next? And that's why they're worried about how they'll pull through the next 3 to 4 years. That said, on the Bitcoin, let's get a couple of levels out of the way. In the near term, you're not ruling out maybe we see a bit of a pullback. So if that's the case, where do we head to? That's point number one. And on the longer term, say once Trump is done with this tenure of his, where do you see the Bitcoin headed? There have been calls for 250,000, 300,000, even more.
I think in terms of Bitcoin, there's sort of two views. There's a view, if you still believe in the market cycles, it's where is it going to end at the end of this cycle before we get a bit of a sort of longer, prolonged, dip in the market, if we do indeed get this bear market that we've seen in previous cycles. So where is Bitcoin essentially going to head for the rest of this year and the beginning of 2026? Estimates range from, dropping below 100K to, as you say, 250K. That whole range is very acceptable. Some of the more extreme views are sort of saying the 500K in this cycle. And that's really if we get a big surprise coming at the end of this year and the institutions and countries actually start buying Bitcoin for strategic reserves. So to date, we haven't really seen the institutional money buying up the Bitcoin. They're still evaluating, and nation states are also still evaluating whether they're going to start buying up. If any of that starts to be triggered before the year is out of 2025, we could see a really big jump up. And the opposite could happen if it remains kind of muted as it is currently, although we're in the summer, so it's quiet. But then what's interesting is, where is Bitcoin ultimately going to go in the next cycle up? So when we're heading into 2028, and that's where we're really looking for it to surpass the value of gold. It's got this narrative of being digital gold. The market cap of digital gold is about 20 trillion, 15 to 20 trillion. So where is Bitcoin going to be? What price per Bitcoin does it need to reach if it's going to surpass the market cap of gold? And estimates are around $1 million US dollars a coin for it to become equivalent with the gold industry. So I think that's where people are looking for the peak of the next cycle. How it tracks in between that time, I'm unsure. But I think the most positive news is that now the US has made it a strategic reserve asset, something of national importance, and not just holding Bitcoin, but encouraging the Bitcoin miners, that infrastructure, to also be in the US. This whole Bitcoin industry is very unlikely to go back to an industry where it's forgotten or it gets banned. That being said, China just came out again and banned Bitcoin and said that it's illegal. So they're the world's second largest superpower, and they're going in completely the opposite direction when it comes to Bitcoin. So I think as positive as moves in the US are in how they're viewing Bitcoin, we can't ignore the fact that other very large nations like China have the opposite view to the US on these assets.
I just want to go back to the valuations that you put out, Lucy. We are at $4 trillion of an overall market cap when it comes to cryptocurrencies. And as you mentioned, gold is at $15 to $20 trillion right now. How far are we away from that one? And while Bitcoin, of course, continues to be the dominant one with nearly 60% of overall market share, what are the other cryptocurrencies that you're looking at which could really be the second or a third or a fourth Bitcoin, really?
Yeah, so I'm a venture capitalist, so I'm trying to identify the tokens that are just getting off the ground. So, for example, when Solana was on the block, or, Ethereum just started, because Ethereum was, quite a few years after Bitcoin. So it's really my job is to identify new upcoming tokens. But in terms of sort of broader view of the liquid crypto markets, there's this understanding or acceptance, I would say, that this cycle will be different to the last cycle, in the sense that the last cycle, there were not the same number of tokens out there. Something that has really been a feature of this cycle is an enormous proliferation of tokens. And that's because the infrastructure has become even more accessible to any individual. So anyone can launch a token. So you've got this sort of tens of millions of spam tokens out there, which is making identifying the key tokens that much harder. So in a sense, it's very positive because it's raised the bar for which larger tokens you're going to look at. Are they revenue generating? Are they bringing utility to users? There's a much more critical look at how important these tokens are in blockchain ecosystems. And actually that's welcomed. So the view is that obviously the major cryptos, Bitcoin, then Ethereum is the second largest crypto. Then you've got other large cap cryptos that, if their business models are making sense, and many in sort of the decentralized finance, the DeFi space, they should also do well in this market. And maybe the rest of the tokens don't get caught up in any euphoric tops that are potentially going to be reached this year. Whereas in previous years, everything went up. It didn't matter what token you bought, as long as you got out before it all crashed, of course.
Well, yes, we did witness that. Lucy, very interesting point that you put forth is on how US seems to be leading it all, and China, the other big economy, is going absolutely in the opposite direction. So when you look at India, what's your sense? Because India, again, is one of the largest growing markets in sense of crypto adoption. And then you have the rest of Asia. The Europe markets also seems to be doing quite decent. So when you look at the geographic maturity when it comes to cryptocurrencies, how would you rate one geography vis-a-vis the other?
Yes, I would say, India and China are very young populations, and this technology is appealing to the youth. They're a generation that are growing up obviously on smartphones and tablets, and blockchain and crypto and tokens is very natural to them. So I would say it's also a young person's technology. I think it's the people that are already more mature in existing financial systems that are resisting it the most. And so India is one of the, they've got up to 20 million crypto users already, and that's in a country that hasn't fully embraced the currency. India, I think, as I said at the outset, it's one of the countries now the US is so positive on it. It's like, how are we going to fit in? What are we going to do? And they've started looking at regulatory frameworks. Obviously, they have a very high tax regime for crypto. So in a way that's prohibitive because, it's making 30% on capital gains on crypto, and that sets it apart from many other jurisdictions. But I think policymakers have got the digital rupee. There's this understanding that this technology is important. I think they sit somewhere in between the US and China. I think big countries with young populations that are relatively underbanked in comparison to the West are a little bit fearful of this technology, because this technology allows you to engage in financial services, make payments, do transactions without needing a bank account. So suddenly a lot more people are part of a financial system. It's censorship resistant, it's permissionless. And so I think governments are trying to work out how they're going to monitor the space, how they're going to ensure that investor protection is there, anti-money laundering is in place so that they're part of a global financial system. So these are big questions that need to be worked out. And meanwhile, the pace of innovation in this space and adoption of the technology is just racing. It's just going so fast. And I think that's what the US is now saying. They're saying, we can't fight this. They've actually come out and said, we cannot fight this. And DeFi is the future. So we need to figure out how we're going to work with the industry and actually make DeFi work with our foundational principles of being a regulatory government, but we can't stop it.
Well, those are the final words there. Of course, Lucy, very, very interesting conversation there. And as you said, there are tens and millions of tokens out there and a lot of education really required when it comes to investors in India and rest of the part of the world as well. But thank you so much for your time today, and we hope to speak to you very soon again. But with that, it's time for a short breather on the show. On the other side, we will be joined by Richard Regalia of Matrix Global to talk all things crude and the way forward. Stay tuned.
Welcome back. You're tuned in to the Big C. As promised, joining us now on the show is Richard Redoglia of Matrix Global. Hi, Richard. Good to see you. And as always, well, my first question to you is, what, according to you, is the possibility of sanctions on Russian oil?
There are already sanctions in the sense that the Russian oil is being sold at a discount into the world markets. Taking Russian barrels off the market, a total sanction of all Russian oil from whatever party would cause a massive increase in price, right? Russia produces around 9 million barrels a day. It exports about 5 million barrels a day to the rest of the world through its dark fleets. So the idea of a total sanctions, I think, is highly unlikely.
All right, that doesn't sound like very good because those are big numbers that Russia produces and exports as well. But Richard, also, Trump has said that he will increase penalty tariffs on India for buying Russian crude. I mean, the first half of 2025 saw India buying almost 35% of its requirement from Russia. What are your thoughts if that does go through? Where does India stand?
I think what Trump is doing is always negotiating. I think he's always in the process of trying to work a deal. There's a couple things going on here, two major things. One is India does not have a total tariff deal just yet. If what they've been doing is still at the negotiating table. So that is one part of the deal. The bigger issue that's going on right now, and I think what Trump is doing, he's trying to get Putin to the table to discuss the Ukrainian war. So I think that's really the number one focus here is not the tariffs on India, which is I think a ploy in a way to get India to agree to other tariffs. The real ploy is here. He wants to get and put pressure on Putin because he wants to get him to the negotiating table. That's the number one reason I believe that these tariffs are being discussed. And we can talk about the tariffs overall, right? There's some limited room for these tariffs, or I should say for a couple of the large Indian refiners, IOC in particular, to reduce their actual importing of Russian oil. So what we might be seeing here is a negotiating tactic where it's not that we get a total issue where Russian oil doesn't come to India, but we see less barrels coming to India. There is excess capacity in Saudi Arabia. The number one, I'm not sure if you're aware of this, the number one importer to India is Iraq, and Iraq has some excess capacity. So I would think what we're going to see here is some acquiescence from a one or two of the Indian refineries and saying, you know what, we'll push back and we won't buy as much Russian oil. And I think that's the ploy that we're seeing Trump right now. That's his whole idea.
Well, what's your sense, Richard, on crude prices in the event of sanctions on Russia and, and all works well? Tell us, what is the price you are working with for both the scenarios?
Again, I think it's almost impossible to believe that we're going to sanction all Russian oil. It's almost a physical impossibility. They produce 9 million barrels a day. When you adjust production at the margin of 1 million barrels a day, you have major price moves. We saw, I was on your show not last month, we saw what happened during the Iran attacks by Israel. The market spiked to about $6, $7, $8 higher, and then move back down to where it is right now, around $65. In fact, the price where we are today is exactly the price where we were after the retrenchment after the Iran attacks. So I think we have to believe that there's not going to be um, uh, total sanctions on Russian oil. There can be an attempt to push prices lower, or to get maybe some less purchases of Russian oil, but that I believe will be taken up by the Middle East. It takes 45 days for a barrel to come from the Baltic all the way over to India. It takes 15 days for a barrel to come from the Middle East. So what we should be watching right now is basically flows. Oil Refiners purchase oil upwards of 45 days to 60 days ahead of when they're going to need it. So the purchases of Russian oil have already occurred. They're already on their way. It's going to be over the next couple months. Will we see a change in the shipping patterns? And that will be our first clue of what's going on. But I can't believe that we're going to see any kind of major sanctions that cuts off the flow of Russian oil. That would be detrimental and destructive for everyone.
All right, so that's assuring to hear that. But also, what's your sense on the OPEC increasing production till the month of September? They've been doing it since the month of April now. And is it about increasing market share? Is it about getting revenue back in? How do you see the OPEC move?
OPEC is doing exactly what they're going to be what they said they were going to do. OPEC has been OPEC Plus. Remember OPEC Plus, and this is a wrinkle, right? This is an interesting wrinkle in the equation. OPEC Plus, which includes Russia and some other satellites of the Soviet Union, have joined OPEC in maintaining production discipline. But that production discipline has been such where they told the world over the last year now that they're going to be increasing their production levels. And that's exactly what they're doing. They will continue to increase their production levels along the schedule that they're laid out. And if you think about what they've done, I think this next increase, it's going to be about 400,000 barrels. This next increase plays kind of interestingly into what we're seeing right now. Where will those barrels go? Well, how about if IOC decides to buy a few more barrels out of the Middle East instead of out of Russia? So this could be chess on a higher level. I don't think it's necessarily the case. I don't think Trump is probably trying to do that, but it would be interesting to allow some of the barrels that are coming out in September. Remember, we just talked about 60 days ahead of time? That some of those barrels will be coming from the Middle East. What's interesting again is since this announcement of the tariffs, the market's down about $1. So I've said this before. The market is the final arbitrator of what this all means, and what it's telling us right now is it doesn't mean very much. I understand the political ramifications. I can understand where Modi has to deal with Trump and have to talk to his people about what this means. But in reality, Trump has been doing this now for the last 6 months. He's a negotiator. This is how he plays the game. He wants to move things along many levels at the same time. And when headlines are kind of lead the way, I think it misses the nuances of exactly what he's trying to do, which is one, get a deal with India on overall tariffs, most likely on agricultural products and others. And two, he wants Putin to come to the table on Ukraine. And Putin is, in this case, seems to be winning the war and is not being a willing partner in that decision.
Well, Richard, Trump has said many times about, he's spoken about drill, baby, drill. He's talking about increasing U.S. production higher from these levels too. What's the viability, though, of the same, according to you?
Trump's effect on current U.S. production is minimal. U.S. oil production is around, I believe, 13 million barrels a day. This is about the highest it's going to go. The U.S. is producing everything it can at this time. U.S. policy as it relates to future production is more positive, right? We're going to open up some more lands in Alaska. They're starting to sell for more leases in the Gulf Coast. Oh, actually, the Gulf Coast, right? The Gulf Coast, but all through Louisiana as well. But U.S. production is not going to see any major increase. The federal government doesn't have the ability to force more production. The market does, and the market right now is producing at the highest levels close to ever. I think we hover between around 13 million barrels a day. But remember, in the U.S., the fields that we're producing are being fracked, and the production profile of fields it falls off dramatically after 6 months, and so there's this constant need to produce because we're losing 3 to 4% of production every year regardless. In some cases, we're losing 3 to 4% for a particular well, given the way that oil is produced in the Permian and other parts of the U.S. that are using fracking as its base technology.
Richard, that point is well taken. What would you also say is the best strategy now for India, given the circumstances? India's portfolio is well diversified when it comes to oil-producing countries. We are importing from more than 30 or 40 countries right now, but clearly Russia was a big number there. What would you advise if you had to India in sense of crude oil imports?
That might be above my pay grade. India is probably one of the most successful, largest countries in the world, and I've had good conversations with some of your economists. India's goal is to provide the cheapest oil in the world for itself, and its consumers. But I do think in this case, it might behoove them to maybe take a little less Russian oil. In fact, before the Ukraine war, the total imports from Russia to India was about 2% of your total. Now it's about 35 to 40%. I believe the best strategy would be take a few less cargoes. Buy some extra crude from the Middle East, and everyone is a winner. I think the goal really here again is tariffs beyond just oil. Trump's comment that India is selling this oil at a profit, at huge profits in the marketplace, is not. I don't believe is true. Russian oil trades at a discount to Brent, as they say. There's an official marker on it. That used to be about $10. It used to trade about $10 under the Brent price. Now it trades about $3. On top of that, almost all Russian oil is moved on a dark fleet, meaning that the normal insurance controls and other safety measures aren't part of the movement of oil, and that has an extra cost to it. So I would say at least half the barrels that are coming into India are coming in on older tankers. They're coming in on tankers that are not part of the insurance regime that dictates how large vessels move around the world. And so you could ask me the question. I think it's a fair one. You're asking a guy in California what India should do, but I do think, and I think I'm right. Buy a few less barrels, buy it from the Middle East. Tell Trump, you know what? We're trying to do the best we can, and do a deal on overall tariffs. I think would be the way to get peace among all parties. Because I think the number one goal here is India needs to be a solid partner with the U.S. and the U.S. should be a solid partner with India.
Interesting suggestion, Richard. Let's see whether or not it plays out that way, but it's quite a logical solution is what you're giving us. Now, I wanted to ask you, do you also see the tariff impact on global oil demand growth? Do you see it hampering it a little bit?
No, none, absolutely none. I think there's going to be none. No, oil demand is on its way up no matter what. Oil demand is being met by supply, right? Oil demand is about 103 million barrels a day. A couple of years ago, it was 100 million barrels a day. A couple of years from now, it's going to be 105 to 106 million barrels a day. But the tariffs, and really the only real tariff we're talking about is this one we're talking about now about India. We saw what the effect is. The market's down $1.20. In fact, it's even falling even further as we speak. So I don't believe that what we're seeing is tariffs having an effect on oil price. Oil price is a function of supply-demand balance across the world. And remember, oil is fungible, meaning you put oil in one part of the pool, it comes out, it's still in the other part of the pool. And so I think all we're seeing here is the level of the pool staying the same. Tariffs won't affect that. The idea that we will stop the flow of Russian oil through sanctions, I think is misguided. At absolutely a misguided policy.
Richard, those are very interesting points that you're making that, well, India needs to, one, negotiate and do not see much impact in the global markets when it comes to crude oil prices or crude oil demand from these tariffs. So that tells you that we are far away from peaking in sense of global oil demand here. And what we could perhaps be looking at is stable crude prices going forward as well. Thank you so much for your time today, Richard, and making sense of what really is happening in sense of tariffs and the crude oil prices there. But with that, it's all the time that we have on this episode of Big C. Thank you for watching from here from me and Nigel and the entire team that put the show together.